Welcome back to the Brighton Chamber Podcast. I'm your host, Cameron Harris, and this week I'm joined by Ed Walter from Walter Financial Partners. Ed, thanks for joining us.
Cameron, thanks for having me.
So, real quick, if you could tell me what made you want to get into the insurance industry?
Cameron, that's a great question. I think most kids, when they're growing up, don't say, I want to get into insurance. I actually wanted to be a history teacher and a football coach. I always found history fascinating, and I just realized that where I wanted to go in life wasn't going to be through being a history teacher. Still miss the coaching. I still one day maybe want to be a football coach. Always envied Brighton's football program when I was in school here. But most people I found that get into the insurance industry, it's a couple different scenarios. One, they either have a family member or a friend that brought them into the business. Two, they might have had something traumatic happen to them in their life, like a family accident or illness that maybe set them back, maybe set the family back a little bit, or else there's just that need and that burning desire to help people. When I was 22 years old, I didn't know exactly what I wanted to do, but once I realized I didn't want to be a history teacher anymore, I thought about real estate, wanted to be in business, and I found out about the concept of supplemental insurance. If I were to ask you, Cameron, what's the first thing you think of when you think of insurance? You can say
that it's a scam.
Okay, no, I hear that. I hear that often, right? And I know why people feel that way, right? Rates go up, right? Nobody likes rate increases. You file a claim and it doesn't get paid, or you get the runaround. You have to call 1-800 numbers and you're not getting a straight answer. The insurance agent forgot to tell you something, or maybe overpromised and underdelivered. So I actually really enjoy talking to people who say it's a scam or it's bad. But if you think about it like this, over the past 5 years, most of us have been to the doctor or the hospital or the emergency room for something, right? And if you're married or have kids, the case is even more so because you have more people under the house, right? So that means health has been, impacted over the past 5 years. Income, family household changes, right? Past 5 years, income's probably changed a little bit, right? And then health insurance has probably changed over the past 5 years as well, too. Guess what? Over the next 5 years, health, income, insurance is all going to change, right? One of the ways that I encourage people to look at the types of programs that I work with is, if you've ever been to the doctor, the hospital, the emergency room, you walk in the door, what's the first question they ask you?
What's wrong?
Nope. The first question they ask you is, do you have insurance?
Yeah.
They don't even ask, can we stop the bleeding? And the reason they ask that is because they want to know how they're getting paid, right? How's the doctor getting paid? How's the hospital getting paid? How's the emergency room getting paid, right? So if you have benefits and the doctor and the hospital are worried about how they're getting paid, who's really benefiting from the benefits, right? So when I found out about the concept of supplemental insurance, which most people aren't familiar with, I think it's a growing industry. More people are catching on to what it does. But when I started in 2005, I started with a Fortune 500 company that had a dominant monopoly on the market. Only had about 20 competitors, and the attitude was kind of like my way or the highway. 2008 happened, a lot of economic stress, healthcare reform, Obamacare, and many people got out of the insurance industry who were used to doing it the same way over and over, 80s, 90s, 2000s. That's when I got into management, and I really liked helping and mentoring people getting into the insurance industry because I made so many mistakes at the very beginning, right? And, when you use your health insurance and the doctor and the hospital gets paid, what are you left over with? A copayment, a deductible, reasonable and customary charges, right? And that's why a lot of people think it's a scam, because I use my health insurance card and now I have to pay thousands of dollars in leftover expenses. What am I even paying this health insurance for, right? And then my rates are going up every year and it's covering less and less. But what most people don't realize, on top of those medical bills, what about the daily living expenses, right? If you try to use your health insurance card at the grocery store, Is it going to buy you groceries?
No.
Is your health insurance card going to work at the gas station to put gas in the car? If you had to see a specialist in Cleveland or Minneapolis or Houston, is your health insurance going to pay for the airfare to get there, the hotels, the meals, and the lodging? It's not, right? Health insurance pays the doctors and the hospitals. So the concept of supplemental insurance, which is not new, but it's becoming more and more popular, is if you have a family accident or an illness, it pays you cash directly. So you're going to maybe have medical bills over here and you're going to have personal bills over here. You use that cash to pay your rent, put food in the refrigerator, put gas in the car, those day-to-day living expenses. And that is something that I became very passionate about at a young age because I too felt insurance as a scam. I still feel certain insurances could be a scam. But when I found out about the concept of supplemental insurance and I thought, geez, I have a family history of cancer, heart attack, stroke, and I've seen my grandparents go through some financial distress because of that. Or the times when I was a kid and I was always in the emergency room, there's that financial distress that comes with accidents and illnesses, and nobody ever wants to think about getting hurt or sick. But when it happens, it's never at a convenient time, and money has to come from somewhere. And I think today, more and more people, especially in this economy, are paycheck to paycheck. If you lose your number one asset, which is your ability to produce an income, not how much Bitcoin you have, not how much stock you have, your number one asset is your ability to produce an income. If you lose that, where are you going to get money from? Most people say, well, I could live off of savings, right? Well, for how long? I could ask the bank for a loan. Banks don't loan money to people who aren't working. You could ask family and friends. You could start a GoFundMe, or you could pick up a supplemental insurance policy, which would pay you cash directly if you lost your ability to produce an income. If you did have an event like cancer, heart attack, stroke, if you had an accident or have kids in sports, maternity, there's all types of different programs that can provide a financial safety net that help you, spouse, children in the event of that accident and illness. And that's something that I became very passionate about as soon as I got into the business. I really enjoyed explaining this to people because I'd have someone say, oh, it's a scam, insurance bad. And I just show them how supplemental products are different than traditional insurance as they think of it. And then I was able to build up a decent client base in the Lansing, Michigan area where I started in 2005. And as much as I enjoyed, educating people on these programs and meeting with business owners and human resource managers and CFOs and talking to the employees, I really enjoyed bringing people into the business who never thought that they would ever get into insurance, right? And teaching them from my mistakes, because that'll save you a lot of time, right? You can make mistakes on your own or you can learn from others. And I've never been afraid to make mistakes because I've learned so much from my mistakes. And if I can learn from my mistakes, I can teach others how to save time from not making those same mistakes.
Well, I feel like a lot of people come up with the idea that it's a scam because they just feel like they're shelling out a bunch of money and they don't actually see what it's going towards. And even when they do have an accident, they kind of get the runaround from a lot of insurance companies of not wanting to actually pay out. So I feel like that's important, of feeling like their money can be flexible, that they're paying out.
Yep. And what I like about the supplemental type products that I've worked with for 20 years is it's really all paid after the fact. And what I mean by that is when you leave the emergency room, when you leave the hospital, the surgical center, the doctor's office, whatever it is, the one thing that you don't think to ask of is, oh, I need the paperwork, right? Well, if you get us the paperwork, you literally know exactly what to expect from the claim. We just need the paperwork. Prove it, right? So as long as the paperwork's there, we pay the claims, and that's very rewarding to know somebody who might have thought these types of programs were a scam now has that financial safety net, and they don't have to worry about looking for alternative ways to fund their family over the next few months or even ongoing. Definitely.
So you also train brokers to get into the industry, correct?
Yeah. So when I first got into the insurance industry, many health brokers just did health insurance. They looked at the supplemental type benefits. I jokingly say as a, would you like fries with that? And many of them still do. The health brokers that are only working with one carrier or only working with the carriers that wine them and dine them are really short-sighted because, when I first got into this business, there were only about 25 companies doing supplemental benefits. Today, there's over 200 of them. So, many of the brokers are very focused on health insurance, right? When you think of insurance, you think of car insurance, right? I don't do car insurance. You think of health insurance. I don't do health insurance, right? You think of maybe insurance for your home, right? I don't do that. The only insurance that I do and I'm passionate about are the programs that pay cash directly to the policyholder so that they can afford to keep their lifestyle afloat. But for some of the health insurance brokers that focus really just on health insurance and kind of dabble in this, what they don't realize is their client is still buying supplemental, just not from them. They might be buying it from the carrier directly, but if the health broker doesn't have a solid supplemental benefit strategy for communication, distribution, enrollment, but even most importantly, the after the fact of how are claims going to be handled, how is billing going to get handled, who's going to really represent my health firm and my client, they're going to lose their market share. And I've seen several health brokers lose market share over the past 20 years because they don't have a competitive strategy. So with what I've done in my career, I've worked with health insurance brokers that don't do any voluntary benefits and help them create a strategy. I've worked with health brokers that had a terrible experience with voluntary benefits, and I've been able to show them a more competitive strategy. But I've also worked with other independent agents that have really gone the carrier route and realized that they can only go so far. And in insurance, you have to look at it like this. If you were to hire a real estate agent, right, you want to make sure they work for you, right? You hire a lawyer, you want to make sure they work for you, right? Well, when you're talking to an insurance person, who do they work for? Do they work for you or the insurance company? Mm-hmm. How do you know? An agent is usually going to be working for the insurance company. They're going to show you one option, here's what it is, take it or leave it. And that's where some of the pressure comes in, right? Because they're not showing you multiple options because they're not working for you, they're working for the insurance company. As a broker, I show you multiple options, but I get to know you a little bit first so that it's more relationship driven rather than transactional. Because most people who buy insurance don't like to be sold, right? But they like to buy, right? And the less you make it about the insurance product and more about the person, their family, their future, really what they want the product to do, that's where you're going to show the most amount of value because nobody wants to buy insurance. And I think some insurance companies have this perception that an agent opens up their office at 9 a.m. and there's a single file line of 20 people, ready to buy. That's not how it works at all. I actually got a little laugh when I walked into the studio today because I saw the no soliciting sign, right? And I've seen thousands of those. I've probably been in 10,000 plus businesses, just making that initial approach. Those don't scare me, the no soliciting signs. You know why they don't scare me?
Why?
I'm not there to sell anything. When I walk into a business, if it's a cold call, I've never been in there before, I'm really just walking in to, one, introduce myself, but two, I want to feel the culture or the vibe in that business because that was one of the first things I learned right away is you can walk into a company and you can feel the tension. You can tell people don't like it there. The boss is kind of a jerk. I'm probably not going to want to pursue them, right? And then you go into other places and they're very welcoming. The employees are looking out for each other. You can tell they love where they work. People don't quit jobs. People quit people. And, when you have that culture there, that's usually the type of client I'm going to work with. If I get reamed out for having hey, didn't you see the no soliciting sign? I'm not selling anything today. I just stopped by to introduce myself and, you go from there. And if that's the be all end all is the no soliciting sign, then it's probably not going to be a good fit. But I understand that businesses need those because people come in and try to sell trinkets and won't leave and that type of stuff.
Yeah. So why would I need supplemental insurance if I have actual good health care or other insurance?
That's a great question. And I appreciate you asking rather than saying, I don't need because I have good health insurance. Again, if you think about it like this, your Blue Cross Blue Shield or HAP or Priority or PHP, whatever it is, when you go to the doctor or hospital, you give them your card, right? That pays the doctor and the hospital. And then when you look at your deductible, it's going to be a couple $1,000s, right? Do you have a couple you don't have to answer this, but do you have a couple $1,000 set aside specifically for a deductible? You don't have to answer that. Then the second thing you have to think about is any travel expenses, right? Maybe you have to see a specialist in another city or another state. Do you have a couple thousand set aside for that, right? Most importantly, what about day-to-day living expenses? Mortgage, rent, utilities, those day-to-day expenses, health insurance doesn't cover that. And then most importantly is loss of income, right? If you're off work for a month, there goes your paycheck. Now I need you to come up with a couple grand for a deductible. Now I need you to come up with all of your living expenses. Remind you, you don't have any income, right? And then hopefully there's no travel expenses, right? And unfortunately, we see a lot of times if something happens to spouse or child in a dual income family, that dual income family could go to a zero income family literally overnight because both of the parents have to take time off from work to care for the child, or the breadwinner has to take care, or whatever the case may be. Or even if that breadwinner is still finding a way to work, they're not showing up 100% productive because they're worried about all the stuff that happens at home. So most people, when they ask that question of, why do I need this? I have good health insurance. I show them a circle. And on one side of the circle, it shows what health insurance does cover. On the second side of the circle, it shows what you're responsible for. And if you do the math on, what your out-of-pocket expenses are on top of your day-to-day living expenses, that really shows the need, right? Especially when you really look at, family history, lifestyle, those types of things. So it's really designed to pay you to keep your lifestyle afloat when you do have that accident or illness that eliminates your ability to produce an income. Does that make a little bit more sense?
Yeah.
Because the number one cause of bankruptcy in America for over 20-something years now is medical bills. And most people, it's like, it's because they don't have health insurance. Well, no, statistically, 80% of the people that have filed for bankruptcy over the past 20 years do have medical insurance, but they don't have a plan for the other side of the circle, and that's where the financial distress comes in. So you can have the best health insurance in the world, but it's not going to pay your day-to-day living expenses. And unless someone has 3 to 6 months in reserves and money set aside for medical bills, it creates that financial hardship. And that's why I'm big on the education piece, because when I do a presentation to a business owner or a human resource manager, CFO, or to a team in any industry, I don't want them under any circumstances to feel as if they're being sold. I want them to feel like they're being educated. I want them to feel like they're being empowered, and I want them to feel like they're enhancing their benefits. One of the terms for, I say, supplemental insurance, it could be perceived as an add-on or an additional. When I first got into this business, it was called supplemental, but it was really more called voluntary benefits, right? Because that was before there was really the huge deductibles and co-payments and leftover expenses. So you have great health insurance. Do you want some voluntary stuff? I don't need it, right? Well, it's not so voluntary anymore because of how health insurance is going, right? And it's going to continue to go up in price and probably cover less. That's why I don't touch that stuff. But supplemental insurance is a term. Voluntary benefits is a term. Enhanced benefits is a term where people just pick and choose the programs that make sense for their unique family situation, whether they're single parent, empty nesters, two-parent family, doesn't matter, right? We all have ambitions in life, and our number one asset's our ability to get up and produce an income. And that's the whole concept of these programs, is it builds that financial safety net for you, for your family, and for your future.
But like HSAs, because I'm just now kind of learning about those. Like you saying supplemental insurance of like, I'm picturing it kind of as like money that you put away. Or no, like you pay in and you're able to spend it on. No. Okay.
I've heard that perspective before. Like I put like an HSA, I put money into it, then I withdraw. That's not how supplemental products work. There's a schedule of benefits. So what you do know is I'm paying $3 or $10 a week, right? And if I leave my employer, I can take it with me and I can pay $12, $40 a month, right? Many benefits that are offered through your employer, no matter where you work, your employer owns. You're only renting them while you work for your employer. You leave your employer, you leave the benefits. Supplemental, voluntary, enhanced programs you own. You pay for out of your own paycheck, but you own them. So you can take them with you with no rate increase. You don't have to prove that you're healthy or anything like that. You own those products. Now, there's a schedule of benefits. So, for example, you and I both are riding bikes. We both have an accident plan. We both pay $5 a week, roughly, okay? We both fall off the bike. We both break our arm. We both need the same cast, same surgery. There's going to be a schedule of benefits from a fixed dollar amount where we know exactly what we're getting from the time we walk into the emergency room for an x-ray, for an MRI, for a CT scan, for the severity of the break, for the surgery, for the physical therapy, for the rehab. So we're getting a specific dollar amount for each thing, okay? Now, let's just say you have a $500 deductible, okay? And I have a $5,000 deductible. We both had the same break. Rough estimate, say it's a $1,500 claim because of everything that happened. We both get $1,500. Okay, even though you have a $500 deductible and I have a $5,000 deductible, the broken arm is on a schedule of benefits. Okay, so it has nothing to do with your income. I'm referring to an accident plan. It's based on the severity of the injury. Critical illness type programs pay specific lump sums based on the severity of the accident or illness that happens. So whether you make $20,000 a year or $200,000 a year, you know you're getting X amount of a lump sum if that accident or illness ever happens, right? The good news is it can pay out a lot. The bad news is the more money you're getting from supplemental insurance, usually a longer road to recovery. I've seen these types of programs pay for somebody's home to be handicap accessible after a serious accident where they had to make the kitchen and the bathroom build a ramp. Health insurance wouldn't have paid for that, right? But because the person lost their ability to ever walk again, all of the things that they had to go through, there was a fixed dollar amount. Now, I don't think anybody would say, all right, I'll give up an arm for 40 grand, right? But life changes at that point, right? And you have to make certain things more accessible so that you're able to continue that lifestyle. And that's where the supplemental programs pick up. A lot of times, we'll do an initial enrollment and we'll see maybe 60% participation. Then we have a couple claims that happen, right? Because the people that didn't sign up saw, hey, Cameron, what happened when you went bike riding with Ed and you guys both broke your arm? And you're talking about the claim check that you got. And they said, well, geez, I broke my arm last year and I could have really used that money. So we see, the policy holders, they really help grow the business for the brokers if the broker's doing a good job. I've built my business really the old-fashioned way, not through social media, not through anything flashy, but partnering with the community, chambers, associations, networking, a lot of cold calling. I do that for fun. I really enjoyed the thrill of cold calling. A lot of people hate it. I learned early on that if cold calling is the most difficult, nastiest part of this business that makes people quit, I'm going to learn to love it so that I can teach others. It's really an interesting business because sometimes people don't jump right on. They're not early adapters, but you kind of see how things evolve and you say, yeah, geez, I really could have used that, especially when you look back those past 5 years and say, this happened, that happened, the next thing happened. Only part about my job I don't like and I've never liked is when somebody calls me and they say, I really want to sign up today. I say, why? Well, I was just diagnosed with cancer. It's too late. You know, you just have to be proactive. You don't want to sit around and think about that stuff. Am I going to get hurt or sick? But we kind of know what we're up against, right? We know family history, lifestyle, you know, what we like to do on the weekends. And you just pick the programs that make sense from there.
Definitely. Well, Ed, this has been great. I feel like I've learned a lot.
Thank you.
Is there anything else that you'd like to share that we missed maybe?
I'm grateful to the Brighton Chamber and the community here. I've been a carrier rep working for an insurance company for 15 of the 20 years that I've been in the insurance business. And the past 5, I've been a broker working for the client, putting insurance companies in competition for the client. And it's a lot of fun. So if there are any Michigan businesses out there that are open to more competitive voluntary benefit strategies, look me up, wfpmichigan.com, or any carrier reps that are looking for a different distribution model, or any health brokers that either have a stagnant strategy or no strategy at all. I'm happy to partner with them.
Definitely. Is that the best way to get in contact with you, or are there other ways that you would prefer?
I'm on LinkedIn as well, too. It's probably my main social media, kind of quiet on the Instagram and the Facebook. But yeah, look me up on LinkedIn under Edward Walter in Michigan, or look me up on wfpmichigan.com.
Sure. So we'll be including that in the description below, so people don't have to go searching for it. But thanks again for joining us, and thank you for watching. And make sure you're subscribed so you see when our the next video goes live, and we'll catch you on the next one.